is Monday, August 4th, 2025. It's Luther Wilson III here. Shout out to everybody on YouTube and on social media. I'm gonna dive right in. I'm gonna talk about capital, private capital today for real estate, okay? So when you think of investing in real estate or buying a home, or maybe even selling a property, the topic of private capital comes up every now and then. And I want to dig in a little bit deeper because over the last couple months, it's come up in different scenarios that I've come across and different opportunities that have come my way too. And I think it'll be helpful, all right? So when I think of private capital, it could be your own money, but in a lot of cases, it's somebody else's money, all right? So to set the stage, I want y'all to think about when you're buying a property or when you're buying an investment. In a lot of cases, there is gonna be a loan, all right, that you take out, okay? And it could be a long-term loan, right? Or it could be some type of short-term financing. And then over and above that loan, which is usually in first lien position, there's additional capital that is used to cover down payment. It could be closing costs, holding costs, it could be renovation costs, and so on, all right? So for investors, a lot of times that money is not theirs. It comes in from somewhere else, okay? So again, you got the first lien position debt, right? And it could be a short-term loan or it could be a long-term loan, right? And then you have additional capital that can come in from an outside source, but it also could be yours. And I just refer to it as private capital anyway, all right? So when that capital comes in, there's two ways, right? That it can be used or that it can be set up, right? And those two ways are either private equity or some type of private loan, okay? So the private equity means that whoever is putting up that money gets an ownership stake or an ownership share or part ownership of that property, okay? So that's the private equity. On the other hand, if it's a private loan or a private mortgage, whoever puts up that money does not get ownership or does not get equity in that property, okay? Now you can blend the two, okay? But to keep it simple, I'm just gonna refer to the private equity, okay? And the private mortgage, all right? So the private equity might look like someone putting up the money and then they get an ownership portion of the property, and depending on what you're doing with that property, okay? So for what we do, a lot of it is an investment property, okay? So whoever puts up that money gets a share of the property, an ownership share, and then depending on their strategy, if it's a long-term buy and hold or if it's some type of short-term transaction, whoever puts up the money has equity, and then they also get a split of the proceeds or the profits somehow, okay? Now on the other hand, for the private loan or the private mortgage, right? Depending on how it's set up, because there's usually a first mortgage, as I mentioned before, that loan, whether it's on a short-term basis or a long-term basis, because there's already a loan in place, and a lot of times the documentation that's used, it's gonna be secured by the property. So in the case of the private mortgage, private loan, whoever's putting up that money is technically in second lien position, whether it is documented and recorded or not, okay? So what that means is that they don't necessarily get ownership. Again, you can blend it, but I wanna keep it simple. So whoever puts up the private mortgage or the private loan, in a lot of cases, however you wanna word it, unsecured, secured, it's in second lien position. So once you go through that process, again, whether it's some type of short term, maybe a renovation and a resale, okay, or some type of long-term transaction or long-term investment, whoever puts up that private loan that's in second lien position, right, has to, that affects how they get their money. That affects how the investor can then move through that process. Okay, so I bring this up because I'm going through it. I've gone through it numerous times with partners, with clients and customers. And I think, with it being third quarter 2025, it's a different ball game. Things have tightened up a little bit, and in some cases have slowed down. So, we have to work through these types of situations. Okay, so one cool thing or another cool thing about the private mortgage. Okay, so the way I see it, and from what I've seen and experienced, if you're putting up capital and or you're using capital and it's private equity, meaning that you or whoever puts up that capital gets an ownership stake or an ownership share of that property or in that investment, it's gonna be harder to get your capital back out. Okay, so I hope that makes sense. So if you're putting up money or if you're using money to do an investment, you're borrowing, you're leveraging, okay, and then you have the additional capital, right? You or whoever puts up that capital, it's tied up a lot tighter. It's a lot tighter, okay, because whoever's putting up that money, the private equity owns the investment. So if they want to exit, or if they need to exit for some reason, you're gonna have to work that out. And a lot of times it's gonna be a lot more challenging, okay? Whereas on the other side, right? I talked about private equity with the private loan, whoever puts up that money, they're in second lien position. In my understanding, what I've seen, it's a little bit, it still can be challenging. It still can be, hard to get that capital back out. But if it's simply a private loan, I think you can get your money back out a little bit easier because you don't own that asset. You don't own the property. You don't have to necessarily wait to go through a renovation or a refinance or a resale, okay? Or you don't necessarily have to wait years on end and enjoy equity or cash flow, where if you just put up the money, if it takes a while to get through that process, whatever the investment strategy is, again, you with the private loan can exit. And I'm gonna get into that, how you can make that happen, okay? So I've talked about this on some previous videos, so I wanted to recap because it's crucial, it's very important, all right? So back to the private loan or the private mortgage, okay? So once the money comes in, right? If it's documented and secured properly, right? There's gonna be some forms that are used, okay? So depending on where the property is located, what state it's in, all right? The forms that get used for that private loan is either gonna be a promissory note and a mortgage, or it's gonna be a promissory note and a deed of trust. Okay, so those forms, right? You may have heard the term note. Okay, so note and mortgage, or a note and a deed of trust. That note is considered an asset, and that note can be sold. Okay, that note, which is in second lien position, right? Whether it's secured, okay, and unsecured. And by the way, when I say secured or unsecured, it means that if it's secured, those forms are going to be recorded on the public records at the county courthouse for whatever county that property is located in. Those forms are going to get recorded, so it's public. If somebody outside can look that up, it's publicly known. That means it is secured. If it is not recorded or documented, then it's unsecured. Okay, so that's a difference there. Either way, right, that loan, okay, which usually has some type of interest that's being charged for the use of that capital, is indeed an asset. So that note, as I mentioned before, it could be a note and a mortgage, or a note and a deed of trust, depending on what county, what state you're in, right? That note can then at a later date or immediately upon creation can be sold, or it can be traded, or it could be substituted somehow, if that makes sense. So again, I want to reiterate with the private equity, right? The money that gets used to get ownership of an investment or an asset, it's tied up in there. You got to wait on it, baby, right? Or, and then on the other side, you got the private mortgage or the note that gets created. The note, another term for that note is called paper, right? So it's a paper asset. Some of y'all have heard that term, okay? So can those be mixed together? Yes, they can. Can those be exchanged? Okay, so if somebody is already tied up in an investment, they put up capital, and it's used as private equity, meaning that they have ownership of that property or the asset, right? And something goes on, okay, right? Imagine that in a real estate project, right? Something goes on, or an investment, something goes on. That, okay, equity, that private equity could be converted to a private note. And you would just have to collaborate with whoever put up that capital, and you're gonna have to rework some documents, of course, right? Get your legal advice, get your consulting. If you have a mentor or somebody that understands that process, right? You can convert either or. You can convert the private equity into a private note, which can then be sold immediately or at a later date, or, depending on what kind of projects or what kind of dealings you have going on, that private loan or the private note, AKA the private mortgage, which hopefully is secured and documented property, could also be converted over to equity so that whoever put up the money for the loan can then get ownership or equity, and then they can sort it out at a later date. Okay, so again, these are things that I've been taking a deeper dive into. These are things that I've done with partners and clients, and with the volatility and the things going on economically, socially, politically, and so forth, this might be helpful for some other practitioners out there, some other investors who are in a bind, okay? Because the reality is, there's a lot of stuff going on in the US, across the globe. It's not looking pretty for a lot of people. And so this might be helpful if you are a real estate agent, real estate broker, some sort of service provider. Definitely if you are a private money lender, okay? Or if you have investments and you have multiple partners involved, this might very well be helpful, because at some point, somebody's gonna want out, right? Or at some point, whatever was agreed upon, okay? And what I see happening, and it happened to me in the past, is where we agreed to use a certain amount of private capital in the form of a private loan, and it was supposed to be on a short-term basis, whether it was 6 to 12 months or maybe a year or 2 years. Well, that time has come and gone. That money's been done spent. And so I'd venture to say that there are a lot of amateur, newer investors and some seasoned real estate investors who are tied up in situations right now where they were supposed to have the private money lender paid off 6 months ago, or perhaps a year or 2 years ago, unfortunately. So for those lenders, you might be stuck. You may not necessarily want to go through the foreclosure process, and you don't want to necessarily hurt or ruin the relationship with your associate, family member, friend, business partner, client, borrower, whatever the relationship is, right? There's other ways to be able to sort it out, okay? Again, you can sell the property, you can sell the note, you could exchange things out, you can move the debt from one asset or one property to another property that has more equity, that's performing and perhaps cash flowing. And then I gotta add seller financing to the mix too. So when you add seller financing to the mix, how that might look is where you come across an opportunity, or it could be something that I mentioned earlier, where the seller or the owner of the property decides to finance a buyer, Okay, so it's a similar concept, and with seller financing. Okay, I mentioned it on a previous video. There are more everyday homeowners who are not investors, and they have no intention or desire to be a landlord or an investor, yet they want to sell their property. Maybe it's on the market now, maybe they're exploring options and haven't quite got it ready to hit the market yet, or if they even want to go with their broker on the market. Some of these sellers are at that point, again, because it's a different ballgame. The market's different now. In a lot of areas, a lot of markets, not in all cases. We're in the Midwest, things are a little different here. So transaction volume has gone down. Interest rates are still higher than they were a few years ago. Relatively, interest rates are still, relatively low. If you look at a chart over the course of, the last 3 or 4 decades, 6-7% is still relatively low. We just got spoiled we had a good 10-year run, right? So now the chickens have come home to roost, and however you want to look at it. So you got to work through this stuff. So for the everyday homeowners who have no intention or perhaps even no business being an investor or a landlord, you might, if you're in that case, look at doing seller financing and exiting and selling to an investor who does this thing for a living. Okay, and then the investors who are landlords or house flippers, renovators, wholesalers, whatever, right, can look at using some type of seller financing to exit and get a large amount up front, whether it's option money or a down payment, and then you can help recoup some money or perhaps some losses, or you could just, like we do, use it as a strategy to create more cash flow and time freedom. Again, so private equity, private capital, right? The private capital, okay, just to recap, the private capital can be used as private equity, or it could be used as a private money loan, okay? And then you can also, incorporate seller financing in there somehow too, okay? So I know this is somewhat advanced and somewhat complex, but you know how to reach me, tap in. I've done a whole series of videos talking about capital strategy and operations, okay? Pretty open book for the most part, and we've been doing this thing for a long time. I have a number of advisors and really good clients and customers that I've helped along the way. So if you want feedback or you want recommendations on how to maneuver through some type of situation, then reach out, all right? So thank you for tuning in. That's it for today. If you've liked what you've seen or heard or felt, click the like button. If you want, go ahead and subscribe. We'll be putting out at least one video a week. Check us out on social media as well. It's Luther Wilson III, Upside Property Services, Kansas City Real Estate, all day long. Stay blessed, y'all. Peace.